Hi. In the coming decade, the relationship between Apple, NVIDIA, and TSMC will continue to evolve, forming a complex network of competition and interaction. These three companies play critical roles in the semiconductor industry, and their strategies and market dynamics will profoundly impact the global technology ecosystem. Point one. Apple's strategy and market positioning. Apple has been one of TSMC's largest customers, relying on TSMC's advanced manufacturing technologies for its products, such as the iPhone and Mac series. Reports indicate that Apple accounted for about 25% of TSMC's revenue in 2021, a figure that may change in the coming years, especially as Apple plans to develop its own AI chips to reduce dependence on NVIDIA too. NVIDIA's growth and challenges. NVIDIA's rapid growth in the AI sector has made it an important customer for TSMC. It is expected that by 2025, NVIDIA may surpass Apple to become TSMC's largest customer, contributing about 20% of its revenue. The demand for NVIDIA's AI chips is surging, particularly in generative AI and data center applications, which will further drive TSMC's business growth. 3. TSMC's market dominance. As the world's largest foundry, TSMC controls 90% of the advanced manufacturing market. With the proliferation of AI technology, TSMC's business is expected to expand further, especially with the application of 3nm processes, which will be a major growth driver in the coming years. TSMC's capital expenditure is projected to reach $35 billion to $38 billion by 2025, reflecting its commitment to future technology investments. The competitive relationship among Apple, NVIDIA, and TSMC will have profound implications for the global semiconductor industry in the coming years. Their interactions in technology innovation, supply chain management, and market demand will reshape the semiconductor market landscape. Point one. Technology innovation and market demand. With the surge in demand for artificial intelligence, AI, and high-performance computing, HPC, all three companies are actively pursuing technological innovation. NVIDIA, as a leader in the AI sector, is experiencing rapid growth in demand for its GPUs and AI accelerators. It is projected that by 2025, NVIDIA's contribution to TSMC's revenue will reach 20%, matching that of Apple. This rising demand not only promotes TSMC's production capacity expansion, but also drives technological advancements across the semiconductor industry. Apple continues to invest in self-developed chips, particularly in the design of its A-series and M-series chips, which enhances its competitive advantage in the market. Apple's strategy focuses not only on improving product performance, but also on securing TSMC's advanced manufacturing capabilities to ensure its technological leadership. Point two. Supply chain restructuring and geopolitical influences. As global supply chains undergo restructuring, geopolitical factors are also influencing the relationships among these three companies. U.S. technology restrictions on China have compelled TSMC and NVIDIA to reconsider their production and supply chain strategies. TSMC's investment plans in Arizona aim to reduce reliance on Asian supply chains and comply with U.S. supply chain security policies. This supply chain restructuring affects production costs and efficiency and may alter the competitive landscape. With TSMC's expansion in the U.S., Apple and NVIDIA will be able to access advanced technologies more quickly, further strengthening their market positions. Point three. Balancing competition and cooperation. Despite competition in certain areas, the cooperative relationships among these three companies are equally important. TSMC, as the primary foundry, provides critical manufacturing capabilities for both Apple and NVIDIA. This collaboration enables them to jointly drive technological innovation and maintain competitiveness in the market. However, as market demands change, this competitive relationship may lead to tensions. For instance, overlaps in technology areas between NVIDIA and Apple could spark competition, particularly in AI and high-performance computing applications. Such competition may accelerate technological innovation, but could also lead to supply chain friction and instability. The projected annualized returns for Apple NVIDIA, and TSMC over the next decade indicate varying growth potentials, primarily influenced by market demand, technological innovation, and changes in the economic environment. Apple's annualized return forecast. Apple's annualized return over the past decade has been approximately 22.99%. However, future growth projections indicate a slowing trend. Analysts predict that Apple's annualized return will decline to around 10% or lower, primarily due to intensified market competition and a slowdown in product innovation. Nevertheless, Apple is still viewed as a solid long-term investment choice, given its strong brand effect and stable cash flow. NVIDIA's annualized return forecast. NVIDIA's annualized return over the past decade has reached as high as 69.32% to 71.78%. Looking ahead, NVIDIA's growth potential remains strong, particularly driven by artificial intelligence, AI, and high-performance computing. Analysts forecast that NVIDIA's annualized return may remain between 20% and 30%, reflecting its leading market position and ongoing technological innovation. TSMC's annualized return forecast. TSMC's annualized return over the past decade has been approximately 22.54%. Future projections indicate that TSMC's annualized return will remain between 16% and 20%, primarily due to the sustained growth in global semiconductor demand, especially driven by AI and high-performance computing. TSMC's market position and technological advantages enable it to continue generating stable returns in a competitive environment. Conclusion. In summary, Apple's annualized return forecast indicates a slowing trend, while NVIDIA and TSMC are expected to maintain higher growth potential. This reflects the different challenges and opportunities each company faces in their respective markets. Investors should consider these projections when evaluating their future investment strategies, assessing the associated risks and return potentials. As the projected annualized returns for Apple, NVIDIA, and TSMC change, investors should adjust their investment strategies accordingly to maximize returns and minimize risks. Here's some specific recommendations. 1. Assess risk tolerance before adjusting investment strategies. Investors should first evaluate their risk tolerance. This includes considering their financial situation, investment goals, and time horizon. For those with lower risk tolerance, it may be necessary to choose more stable investment options, such as bonds or stable blue-chip stocks. 2. Diversify the investment portfolio with increasing market uncertainty. Diversification becomes particularly important. Investors should consider allocating funds across different asset classes, including stocks. Given a forecast indicating strong growth potential for NVIDIA, investors may consider increasing their holdings in NVIDIA. Bonds. Bond can provide stable returns during market volatility, especially in a declining interest rate environment. Other assets. Consider investing in stocks from different industries or regions to reduce the risk associated with a single market or sector. 3. Adjust holdings proportion based on the projected annualized returns for each company. Investors should consider adjusting their holdings proportion. NVIDIA. Due to projections indicating continued growth for NVIDIA in the coming years, investors may consider increasing their holdings in NVIDIA. Apple. Given Apple's more conservative growth forecast, investors should approach investments in Apple cautiously, potentially reducing their investment proportion, especially for those seeking high growth. TSMC. TSMC's stable growth forecast makes it a good long-term investment choice, and investors may consider maintaining or increasing their holdings in TSMC. 4. Regularly review and adjust strategies. Market conditions and company fundamentals will change over time, so investors should regularly review their investment portfolios and adjust based on the latest market forecasts and personal circumstances. This includes rebalancing the portfolio. Regularly check the proportions of each asset class to ensure they align with the investor's risk tolerance and investment goals. Tracking market trends. Continuously monitor market dynamics and company performance reports to adjust investment strategies in a timely manner. 5. Consider long-term investments for long-term investors. Focusing on a company's fundamentals and long-term growth potential is key. Even amid short-term market fluctuations, holding quality stocks, such as NVIDIA and TSMC, may still yield substantial returns. In summary, the annualized returns of Apple, NVIDIA, and TSMC are influenced by various factors, including market demand, technological innovation, economic environment, competitive pressure, and policy influences. Changes in these factors will directly impact the future performance and investment returns of these three companies.